Hello, ladies and gentlemen. Welcome back to Dre's YouTube channel. Today we have a special guest with us. You like my glasses? Yeah, today we have a special guest with us. This is my wife, Danica.
Hi, everybody.
All right. So I'm trying something new today, and please leave a comment down below on what you think about it. So basically, what we're going to do today is I am going to recap my trades from this past Friday, which would have been the 12th of January 2024. Excuse us, we got babies and it's just us. Hey, so these trades, this is 4 trades that I did this past Friday, which was the 12th of January. And these trades was conducted on the SPY, which is the ETF that tracks the S&P 500. Fun fact, this is actually the very first ETF that was ever created. So also we're doing 0-day expiring trades. This is extremely risky, so I do not advise this to anyone else, not unless you are experienced. Pressing forward, some strategies that we will be going over today is the supply and demand using a simple resistance and support line. And also we utilize the 13, the 48, and the 200-day moving averages. And you will also see the VWAP taking place on the chart. Let me actually point this out to you guys. Babe, I'm gonna bring you in 1 second. All right, so if we look over here on the left side, you will see, oh, I'm kind of giving away my trade. So this purple line right here, this is the VWAP, which we actually didn't use as much in our trades, but you will see it kind of come into place. And then this blue line right here, this will be our 13-day moving average. The yellow line will be our 48-day moving average. And then at the very bottom will be our 200-day moving averages. So now you can see on the left side of the screen, and babe, I'm talking to you as well. I'm sorry. On the left side, we have our 15-minute chart. And on the right side, we have our 1-minute chart. All right, so on the right side of the chart, this is our 1 minute, or on the right side of the screen, this is our 1-minute chart. This is going to be, I'm going to show you my entries and my exits and explain to you why I took those trades, and when I exited the trades, why I took profits or cut my losses, either or. And then on the left side of the screen is just a bigger picture that you can see. So what we'll do first is taking off all of my indicators, or not indicators, taking off all of my markings and zooming out just a little bit. What we have here is, this would have been Thursday, the 11th of January. All right, and this was, the blue is Thursday pre-market. So we ended that day. Excuse me, I'm not the best on here. I do my editing on my iPad. So on Thursday, we ended the day right here at $476.33. And we went into post-market Thursday evening, trading kind of flat but a little weak. Fast forward, this is Friday, pre-market opens up. We come up, we touch this 477 level. We got rejected. We came down here to the 200-day moving average, which is this red line, and you see that we started to catch some support. Buyers started to come in, and when those buyers came in, you see that we was also riding that purple line, which is the VWAP. So when the buyers came in, we took out VWAP, and this blue line, which is our 13-day moving average, you see it cross over above the yellow, which is the 48. So we see that the blue crossed above the yellow, so that shows that we had some momentum, and we climbed all the way up to this 478 level. And this is where actually we climbed up to right here, 477.51, right before market opened. So right before I could actually execute a trade. But with that being said, you'll see that we took out the previous, at the opening of pre-market, when we got knocked down from that 477 level, you see that as the market was opening up, we was conquering that 477 level. You see it? So we had some momentum come into play. So fast forward. Now we're going to come over to the right side of the screen. Let's see if we could just make this side the bigger side. Oh, it's still the 15. Okay, there we go. I'm just gonna make it one big one, so because I want to bring you along in my actual trades. First, let's bring back on my indicators. All right, at the bottom, this is the MACD indicator. What this tells me is the momentum that we are having. For example, as we was talking about in the pre-market, how this 477, it got rejected. On a 1 minute chart, it's not going to look as clear as the 15-minute chart because the volume in pre-market isn't as full as say during the actual trading day. So you see these little specks, but if I go back to the 15-minute chart, you remember seeing the full candles that I was just showing you. So all right, so right here, if you look down here at this MACD indicator, you see that when we was rising, the MACD indicator was rising, the momentum was going up. In the same way, when we sold off from that 477 level, the MACD indicator got smacked down and the momentum was coming down. And so right here, we found a bottom at 474 and we came up and we found another bottom. So this will be called a double bottom. Whenever you have a double bottom, you can expect, like say a basketball, if you was to bounce it off the floor, on that second bounce, in the game of the stock market, you would expect it to go higher, not necessarily a basketball, depending on how you bounce it. So started coming up in pre-market, and also when we took off down here, I'm sorry, this last thing I gotta highlight before we go into action. All right, when we took off down here, we see these green candles consistently coming back to back to back. This right here is what's known as smart money or big banks and institutions. Reason being is because us as retailers, we would not have enough money, or we will all have to strategically buy in at the exact same time in order to make all of these candles, to show this bullish of the candle. So with that being said, or you can assume that it's a big bank or institution that just bought into the market whenever we see it take off that consistently. So when all of this buying took place, what I did was I drew a box right here and I considered this the demand zone. So when all of that buying took place, chances are all of the orders didn't get filled. And so whenever the price does come back to that zone, you can expect some type of spike to happen because there's still orders waiting to be filled. So the difference between, say, retail buyers, which is us, and institution buyers, is when the market started to take off, many people would chase the price all the way up, especially if you're expecting it to take out the next highs at 478 or 480. You're willing to sacrifice those first 25-50 cents to get in on that play. Versus a big institution, their order is just going to sit here and remain because they know that price is going to eventually come back down. They want it at a certain price and they're sticking with it. So with that being said, I drew a square right here to symbolize my demand zone. And we have a supply zone at the top, but at this time it doesn't exist. So we're going to go into press and play, and I will stop it as we hit the buys and the sells. All right. Hold on, I wasn't expecting to take off that fast. All right, here we go. So it's zoomed in because it's the 1 minute now. Everything's still the same. I'm sorry, the last thing at the very bottom is the RSI. This is the relative strength index. And what this tells you is if a stock is overbought or oversold. And so right here, we see that we're at the yellow line is at the 72% mark. And then the purple is at that 81% mark. That's saying that we're in overbought territory. So at some time this stock is going to sell off. However, just because we hit this doesn't mean to automatically go short and expect it to sell off. A lot of people get burnt trying to jump to the conclusion when you just gotta let the market play itself out. So keep in mind that at this point, I'm looking at us being in the oversold zone. So we can continue to push higher, but I'm also looking for any sign of weakness. This box up here as the supply zone, let me just bring you over. One day earlier in the pre-market on Thursday, we topped out right here twice. And so that tells me that sellers are present in this zone. All right, so that's something to also keep in mind. So going into today, I have this box. I know that sellers can be present when we show up here. This can also be the time that we take this zone out, but you know, I'm gonna wait for the market to tell me what it's gonna do. So press play. We're going. Mark is up. And stop right here. Oh, hold on. Right there, stop. So right here, I took a short position, which means that I believe that the market was about to go down. So trading the S&P 500, I did a option. Only did one option, I believe, saying that the price would drop down to 477 or 476. So reason why, if we zoom in right here, one, I was already tracking at this. We was going to have potential sellers once we hit this point. So once we hit here, I was looking for any potential sign of weakness. So we get here, we come down, we come back up. Right here, we made a top. When we came down and we came back up, that would have been considered a double top. Okay. All right, and then you see we came down a little bit more, we went back up. Now we got what's called a triple top. And also this line right here is a resistance line that I had drawn out from the pre-market on Thursday where we topped out at. So I see that these candles are all showing that selling is taking place. Every time we try to touch that resistance, people is taking profit. They're selling. All right. And then right here, we come down and we break this 13-day moving average, this blue line. So when we broke that moving average, now this is my third sign that we're weak right now. So whenever we break something, always expect a back test. Even if we're doing a breakout and going long, expect it to come back and back test it. And that's your first confirmation that it is legit. So we dropped underneath that 13-day moving average. And we came back and we back tested it, and that told me, okay, this is legit. We're going lower. So this is where I took my position on a short. And at this point, I know it's going down. This 200-day moving average right here, this is my target. I'm expecting us to break through VWAP. And okay, I'm kind of jumping to conclusion. I'm sorry. The first line of support that we're going to come across is going to be that VWAP and that 48-day moving average. So as this is dropping, I'm also prepared to take my profits at any point in time because I don't want to overstay my welcome. At the same token, look down at the MACD indicator. You see that momentum is starting to come down. Chances are, if this momentum can come down hard enough and we cross over this the zero line, you normally experience a big drop or a big pop when we cross over that zero line indicator. So these are all of the things that while the market is live, I'm expecting it to come down. Back to press play, we coming down. Boom. Oop, right there, we fell straight through VWAP. In the 48-day moving average, everything was still pointing down. And I mean, this was a hard drop. Came down, bounced off of the 200-day moving average, and that's when I took profit. So on that trade right there, we got a 97.89% return. So that was what you would consider a home run play. So press play. If you're enjoying this video, please do not forget to like and subscribe. It will greatly benefit our channel. Thank you. We came down a little more, and you saw that we started to find support. We came up, we touched that VWAP and that 48-day moving average again, and you see it smacked us right back down. And at this point, I'm in no trades. I took profit on the first trade, and I'm waiting to see if the market is going to present me something else that I am familiar with, that I feel comfortable with. All right, so we coming down. Mind you I want to zoom back out. When we took off this morning, you remember we had that demand zone that I drew out, saying that if we hit that demand zone, I want to see how we react to it, if we bounce back up instantly or if we start to fall through it. So you see that we're getting down here closer to the demand zone. So I'm waiting to see if that's going to give me some type of play. Hit the demand zone right there. All right. Also, I want to point out, when we hit this demand zone right here, in hindsight, when everything is 2020, up here, when I shorted the pop, ideally, I could have healed this until we hit this demand zone. But it's not a 100% guarantee we're going to come back and touch the demand zone on the money. Reason being is because who says that is not other buyers present that want to come in and get it at a better price, and who says that, you know, they might feel that this 476.20 is a better price. They don't, you know, not everybody is waiting for it to come back to this 475.70 to this 475.20 zone. So you got to keep that in mind, that it's not guaranteed that it's going to come back and actually fill that zone. But in this case, we do see that we actually came back. We touched the zone. We did get a pop. So some orders that got filled the first time we touched it. We came back, and you see the second time we touched it, wasn't no orders. No orders were there to be filled. So we fell straight through it. And press and play. All right, pause. We fell straight through it. We found support right here. We came up. This right here, this will be called a bull flag. Let me see if I could draw this out for y'all really quick. For you, babe. Something like that right there. Let me clone you. All right, so this would be a bull flag. It comes up, it finds the top, it hits that top, it comes down some, and this is where it'll psych a lot of people out. People get to think, oh, it's about to drop back down. But that next candle, you see the buyers filled back in, wherever they sold to, the buyer stepped right in, and then from there we take off. And when we come out of that bull flag, remember I said I always look for the back test. And so this red candle right here, that would have been the back test, and that also would have been your last opportunity to get in on that plate before it took off. So it came down here, bull flagged. Let me get this off the chart. All right. It conquered this 13-day moving average. We took off from here. Here's where I bought in, which is we came up against the 48-day moving average. I actually bought in once I got confirmation that we was actually conquering that. And also looking down at the MACD indicator, you see that we had just started crossing up. So that kind of aligns with, say right here is when we started crossing up. And you see that it somewhat aligns with the takeoff. So I went long right here, and when I went long here, we came up against that 200-day moving average. We went up some, and when I saw that wick coming off, that means some sellers was present, even though it still ended as a bullish candle. I took profit on that next candle right before we got back under that 200-day moving average. And so this would be considered a base hit, and this was a 17.85% return. All right, so continuing from here, that was the second play. You see we came up to VWAP. We got rejected off of VWAP hard and stop. Okay. We got rejected off VWAP. We came back down to this original demand zone, and we actually healed that zone. So when I saw that we was actually holding this zone, it was buyers present, but right here it was actually like a battle, bears versus bulls. I had took the chance of going long right here, and I had a stop loss. If we broke beneath this demand zone, I was out of the play. However, this is another play that I was shooting for a base hit, so I'm in it. Battling bears versus bulls. If we broke under that yellow, I was out. You see that we started to climb, and right there, we started to climb. As soon as we came across this 200-day moving average again, I took profits. I wasn't immediately just selling because we got there. What will happen is I will be in the profits. I will see that we're coming across some type of resistance. At this point, I'm setting my stop losses. So I'm trying to lock in my profits. So in this case, if I was up 15%, 10%, or if I was up, what actually happened was I was up like 25%, and I just set it to where, hey, if it gets down to 15%, stop me out. So that's what happened on all of my base hits actually. So right here I got stopped out in the profits once again. Press play, and you see you see as soon as I took profits, we got knocked right back down. So I just want to point this out, that do not get married to no play. Don't get married to the market going up. Don't get married to the market going down. The market is forever changing. Random people are constantly going into the market. Right now, if I was to motivate you and you're like, okay, come tomorrow, I'm gonna be in the market. You know, this can change, or this is going to add to the algorithm that's taking place. So the market is forever changing. With that being said, I've been burnt so many times by overstaying my welcome, and that's something that I'm learning. As soon as I jump into play, once we go into the profits, either I'm ending it in a profit or I'm ending it in a profit. There's no way it's going back negative to the best of my ability. So press play. At this point is midday, 12:30. Okay, boom. And right here I took a short position. Why? Okay, zone back out. This morning, or that morning, we made it up to 478.60, and we made it up to that resistance line. We got smacked down. All right, on the way down, when we had came back up and we retested VWAP, that also highlighted another resistance that we had in the play, which was this 477.53 zone. So with that being said, I knew that 477.53 could potentially come into play after we came back and we did this back test right here. So we got knocked down, did all that throughout the day. As we started to find strength right here and we was building back up, it was a slow stair stepping. This is what you would call a premium eater. We were stair stepping up, and I had my eye on this level, this 477.53. So the closer we got to it, which I was expecting us to touch this level for sure, chances are if the market is going to go higher, it has to conquer through that level before we even make it back to the supply zone. Or if the market is weaker, we're going to see signs of that when we approach this level. So as the market is climbing right here, I'm waiting to see what happens when we approach the last local high at this 477.53. So we didn't even make it all the way to it. We got to 477.34. This candle right here is what you would call a shooting star, where originally that was a bullish candle. Buyers was in, and when it made it to that 477.34, sellers stepped in and started taking profit. And right after, sellers were still in, and you see that right here is where the selling began. We got knocked down to VWAP. We came back up, and what was it that I was looking for? I said before it takes off and before it drops, it's always gonna do the retest, the back test. So boom, it came down and started to sell. Right here was the back test. This would also give you confirmation if that's a failed breakdown or not. You know, if it's breaking down and it's not legit, on this back test, it's gonna reconquer it. So in this case, it made it back right there. It gave me the doji candle that told me that the sellers was in. Or bears versus bulls, they was fighting. This next candle was a bearish candle, so that's when I took my short on the position. And we press play. We drop down. Okay, so we dropped down, fell straight through VWAP, and right here when we came back and we did this back test, I took profit, which I actually got stopped out, but once again, that would be another base hit. So that makes 1 home run and 3 base hits. And we let it play out, and you'll see that it actually did come down a little lower. But my profits was taken. I actually quit watching it after that. This was a Friday. I went 4 for 4. I was really happy with myself. And that's how the day went. Nice. What you think? Give me some feedback, boo.
So the last one you said it pulled you out, so you put the stop loss too high basically, and it pulled you out automatically. It went lower.
Nah, well, yes, actually, spot on. I put my stop loss not low enough for the play to continue. For in this particular example, for the play to have continued to play out. Now, I also didn't. I put my stop loss in a position to where, say, basically to keep from losing my profits. You know, because also when you're in a position, say like this position, when I took a long, the longer I'm in the position, if it's not going up instantly, I'm losing my premium. I'm losing money. And so, right, say these two examples. This was the first one was a 17% return. This one was a 10% return. But when you look at the two, you'll say, well, this one went up smaller than this one went up as far as the price increase. So this was a price increase, 75 from 70 to 15, let's say 45-cent increase right there. This was an increase from 12 to 46, so 34-cent increase. But this first increase was a 17.85, so 18% return because of how quickly it went up, versus this second one, because it prolonged, it was only a 10% return. So with that being said, when I got that sudden drop right there, that was the highest percentage wise that I would have got. And so when it comes down and it tests and it came back up, I wanted to lock in those profits. Now down here, yes, I would have made a little more money, but at the time it took for it to get down there, you know, that premium, it wouldn't have been as high as you'd think. Say versus how I was doing the base hits, even if I would have took profit on the first one, let it play out right here on this VWAP where it hit it again, took a short right there, and then rode it down there, I would have made more money in that situation than holding it from the very first one, just off of the time decay. That makes sense?
Yeah.
Okay. Remember, I'm just here to share my ingredients. It is up to you to create the recipe for your journey to financial freedom.